Did you know that the Magnificent Seven, companies like Alphabet, Meta, Microsoft, Apple, Amazon, Tesla, and Nvidia, make up more than a third of the S&P 500's market cap? There's no surprise that blue chip companies have dominated the markets for decades, providing investors like you and me with excellent returns through constant growth. So in today's video, I'm going to break down how to find some of the best blue chip stocks to buy right now, cover their performance, dividends, if any, and why they might be a no-brainer for your portfolio. But before I go any further, it's important to know that I'm not a licensed financial or investment advisor, so this is not financial advice. It's for your information only. Okay, so with that out of the way, I wanted to give a shout out to The Motley Fool for sponsoring this video. The Motley Fool provides investing insight and stock recommendations for investors of all skill sets and risk levels. So I'm excited to partner with The Motley Fool to bring you 10 stock picks from their stock advisor. The average stock pick inside the stock advisor is up 863% versus 173% for the S&P. Scan this QR code or check the link in the description to get your stock picks right now. So what is a blue chip company? A blue chip company in the United States is a large, well-established, and financially stable corporation with a history of consistent performance, strong market presence, and reliable earnings. These companies are known for their high market capitalizations, strong balance sheets, and industry leadership. If you don't believe me, ask anyone if they can name 5 of the biggest companies in the world, and chances are they'll name companies like Apple, Microsoft, Google, or Coca-Cola without even thinking. And that's even if they're not even familiar with the stock market. Blue chip companies dominate their industries and have built a reputation of reliability and success. And that leads me to the first metric that we need to know, the market capitalization, or market cap for short. The market cap is the value of a company calculated by taking its current stock trading price and multiplying it by how many shares of the company are out in circulation. Technically, any company above a $10 billion market cap is considered a blue chip company. For this analysis, however, I'll bring up the minimum to $200 billion, so I'll get the cream of the crop. By the way, I'll be using bar chart for this analysis. They have my favorite stock screener that I use each and every day to research the best stocks to buy, and of course discuss in videos like this one. Their website gives you all the basics for free. All you need to do is create an account using this QR code. So that's my first criteria, companies with more than a $200 billion market cap. Next up, I'll look into what Wall Street thinks about the companies through their analyst ratings. Analysts are professionals who follow the companies carefully so that they're aware of all of the ins and outs. Then, they rate the stock on a scale of a strong sell to a strong buy. So it's natural we want companies that rate higher, and there's no higher rating than a strong buy rating, which is what I'll use for this analysis. However, I work a lot with data when researching stocks, so I guess I have a little bit of bias towards having more data points that align with a certain conclusion. And that means a strong buy rating from one or just a few analysts won't be enough for me. I want stocks that are covered by at least 16 or more analysts. The more supporting data, the stronger my conviction is in that stock's potential. And that's why I limited my search to companies covered by at least 16 or more analysts. Okay, with those 3 criteria set, I ran the screen and I got 20 companies, or the biggest companies in the world. Of course, we do have lots of other things to do in the day, so I'm going to cut down that list to my top 3, discuss each's potential, so you can decide if they deserve a spot in your portfolio. Okay, so first up on the list is a company that practically everyone on the entire planet knows about, and it's a member of the Magnificent Seven. Amazon is a tech and e-commerce company that provides everything from retail portals, digital streaming platforms, and cloud computing services. I still remember when it was just an online bookstore, and now it's one of the companies that has emerged from the dot-com bubble like no other. Today, Amazon continues to dominate e-commerce, cloud computing, and logistics while investing heavily in AI, automation, and sustainability efforts to shape the future of retail and technology. Of course, it's not all roses and butterflies for the company. Competition in the e-commerce space is tightening, with companies like Walmart starting to eat away at its online retail market share. The company is also playing catch up with the likes of Microsoft, Google, and DeepSeek in the AI space. Their CEO, Andy Jassy, said that the company aims to spend $100 billion in 2025 for generative AI projects, which could potentially stifle its income growth over the year. And that discussion frequently comes up in my Discord server. Are companies doing well enough to convince you to buy them now, despite potentials down the line? And are they spending too much money right now, or should they be reinvesting it in other things? And to answer that, well, you can look to analyst coverage because this is excellent for these situations. For example, the consensus for Amazon stock is a buy rating, which means the majority of the 50 analysts covering the company expect better things to come in the next 12 months. The high target price for Amazon stock is $306, which represents around a 53% potential increase from its current trading price. Next up is ASML Holdings. Now, I wouldn't be surprised if you've never heard of ASML. This is a Netherlands-based company that manufactures equipment used in the chip manufacturing process for smartphones, computers, and you guessed it, AI components. Now, here's another quick lesson in investing in stocks. When a certain market or sector is getting all the attention, like AI, always look upstream in the supply chain to the producers of raw material or the equipment, because chances are not many people are aware of them. And those are the companies that will also grow along with the industry while relatively flying under the radar. By the way, the company is a crucial supporter in other big names like Intel, Samsung, and TSMC. However, it does face the same issues as other AI companies, namely potential of weakening demand, increased exporting restrictions, and of course, China's own efforts in developing AI. 24 analysts cover ASML stock, and 19 of them rate ASML as a strong buy and have a high target price of $1,100, representing an impressive 50% potential upside. Okay, so like the last company, Broadcom operates in the tech industry to provide semiconductor and infrastructure software solutions to the big names like Apple, Microsoft, Cisco, and TikTok's parent company, ByteDance. This has led to an incredible 732.38% return over the last 5 years. In fact, 30 out of the 33 analysts covering Avgo rate it as a strong buy with a high target price of $300 or about 53% above the current trading price. Now we have the top three, here's the rest of the list. And if you happen to find something interesting, remember to drop a line on my Discord server. Alibaba, Bank of America, GE Aerospace, Alphabet, Coca-Cola, Eli Lilly, MasterCard, Meta, Microsoft, NVIDIA, SAP, Royal Dutch Shell, Tencent, Thermo Fisher Scientific, United Health, Visa, and Walmart. Blue chip stocks have long been the cornerstone of long-term, stable portfolios. And as we've seen today, some of the best opportunities are in tech and AI-related industries. Amazon, ASML Holdings, and Broadcom each bring something unique to the table. e-commerce dominance, semiconductor innovation, and cutting-edge infrastructure technology, making them potential game changers for investors that are looking for growth and resilience. Of course, investing is never a one-size-fits-all sort of thing. The key is to do your own research, evaluate your risk tolerance, and focus on companies with strong fundamentals and future potential. And if you want to dig deeper into potential stock market picks, consider using companies like the Motley Fool or Bar Chart to help you refine your watch list. So what do you think? Are any of these blue chip stocks on your radar? Let me know in the comments below because I'd love to hear your thoughts and get back to you. If you happen to enjoy this video, don't forget to like, subscribe, and hit that notification bell so that you never miss any of my future videos. Thanks so much for watching, and I'll see you next time.